Try to accommodate as many people as I can. We are having more of these type of panels in the next February and March, so stay on our mailing list and we'll keep you updated. We've never had one this packed. It's a great tribute to these guys and to the subject. So first of all, I'd like to introduce Bill Wyatt, if he can get through the crowd. Bill actually works for Shepherd Mullen. Shepherd Mullen have supported us for over a year now, and Bill is actually sponsoring the drinks tonight, so help yourself to some beer. Now, just one bit of housekeeping. We've actually got 5 pitches tonight after the panel, and if you are one of those people that hasn't checked in with registrations with your business card, can you please see me after I pass this over? I'm going to pass it over to Ronan now. He's moderator for the panel, and he's going to let everyone introduce themselves. So over to you.
Thank you, Pamela, for hosting this nice event. I hope it's not going to be too hot in here. So yeah, I mean, let me just, I guess each one can introduce himself. I'll start. My name is Ronan Kirsch. I'm one of the co-founder of Blockchain at Berkeley. Blockchain at Berkeley was the first university ecosystem that is doing consulting, R&D, and education in the space. Now I kind of moved on and we started Decrypt Capital, which is an investment fund that focuses on privacy-preserving protocols and early-stage ventures. And yeah, I'll let the rest introduce themselves.
Hi, my name is Joseph Bradley. I'm a lead analyst at Neural Capital. My background, I've been working in the blockchain space for about 4 years, came up building these data structures for enterprise, and then by formal study, studied alternative asset management, portfolio construction, and analytics and service of those. So I've kind of mixed that skill set up, and that's what I do at Neural Capital.
Hey, my name is Seth Spalding. I'm a portfolio manager at Passport Capital. We're an RIA based in San Francisco, and we have been doing a lot in the cryptocurrency space. And I think I'll leave it at that. But we're involved in an institutional side, and we'll talk a little bit more about that on the panel.
Hey everyone, my name is Michael Feng. I'm one of the co-founders of QuantAlpha. QuantAlpha is a platform of blockchain-based funds. We use the blockchain to cut out a lot of intermediaries for normal fund management investments, like administrators, custodians, and banks. We do that using the Ethereum blockchain and smart contracts. So our first fund is our own fund. It's a quantitative hedge fund that uses machine learning. And the impact of using the blockchain is that we offer investors daily liquidity and a minimum investment of about $20,000.
Hi, I'm Martin. I'm Martin Froehler, the CEO of Quantiacs. Quantiacs is a marketplace for quantitative trading programs. I have a quantitative finance background myself. We have a community of about 10,000 quantitative developers, freelancers worldwide that build trading algorithms, computer programs that trade exchange-traded markets based on mathematical formulas. We're currently exploring the crypto space as well, both as investors in crypto markets, Bitcoin futures, for example, as well as on the token side for our company.
Got it. Hi, I'm Joe DiPasquale. No, let's see. Yes?
Middle position.
Middle position. Okay, cool. Hi, I'm Joe DiPasquale. I'm CEO and founder of BitBull Capital, which is the first crypto fund of funds. So we're not a direct investment vehicle. What we do is we look at the 140 so crypto funds, and we've chosen a basket of those to invest in and give to our investors. So there's some diversification. Like Martin and Michael, I went through StartX, which is Stanford's incubator, over the summer of last year, summer and fall of last year, and then incubated the idea, launched it in the fall, and we have a basket of different hedge funds and different strategies.
My name is Joshua Goldbard. I am a general partner at Crypto Lotus, a crypto hedge fund, and I am the founder of a company called MobileCoin.
Yeah, so I think most of the panel is going to be about hedge funds, but I mean, I know there's a few different kind of business model here on the panel, so I mean, feel free to answer if you have. If not, just we can continue and have more time for Q&A. So I mean, we see that there's a few. I mean, Joe, you look at a lot of hedge funds. Maybe you guys could talk about your structure. What does it look like, and why did you choose this hedge fund structure?
For me, the reason I chose the fund-to-funds model was because I'd been investing in crypto assets since about 2013, initially in Bitcoin, and then diversifying my portfolio. And in 2016, friends and family and colleagues started asking how to get them some exposure to crypto assets, because the price had already started appreciating back then in 2016 greatly. And so it put a little burden on me to think of what I felt would be the best way for me to invest. And I knew that even at the time, there were a lot of hedge funds with a large minimum, or funds that started closing, or that had a specific strategy, such as an ICO-focused strategy, or an arbitrage strategy, or maybe just a macro lens, or long and short, long only. So I wanted to invest more money than I had in a basket of hedge funds, and so that's what Bitbull does. Is it's kind of a lower minimum, lower fee structure, essentially.
So yeah, I can answer this pretty quickly, I think. So Chris Keshen and Ari Nazir are the two GPs of Neural Capital, and I think our answer is actually fairly straightforward and simple. Like, what are we really good at doing? We take a tech-first approach. That's where this starts. That's where these projects start and end. There's, the markets are absurd at the moment based on, what this technology can actually deliver in service of this myriad of tokens that exist. And so we said, what are we really good at doing? We seem to be really good at valuing and figuring out how to trade this stuff. The picture absolutely still is kind of unveiling itself, but we said, what's that vehicle look like? And hedge funds offer the flexibility to be able to do that. But we think that hedge funds kind of need to grow up and grow into the space, and so that's kind of where we sit at that nexus of blockchain tech and finance. But I think most people on this panel say the same thing.
So I think for us, the reason we chose a quantitative hedge fund is because when we looked at the market, we wanted to address a problem. And the problem was that a lot of people wanted to invest in cryptocurrencies, but they couldn't stomach the volatility and the stomach trending 20% up, 20% down. So what we do is we try to use machine learning to try to predict where prices will go in the next 1 hour to 1 day. And then based on that, we take a risk-on, risk-off approach and either go long crypto or hold US dollars. And what that results in is a risk profile that is much less volatile than cryptocurrencies. Investing in cryptocurrencies directly still captures the upside during longer-term bull trends. And so our goal is to give the average cryptocurrency investor, someone with a few $1,000 to invest, the ability to take a long position without having to lose sleep at night.
So I think you guys both said it well, which is I think figuring out what you do well and figuring out what problem you're going to solve, and those are things that I think all of us are trying to answer. And in our case, the core thesis is really twofold. One is we come from a long history of being global macro investors with institutional LPs, and we knew that we were getting a lot of inbound questions from our LPs of what are we doing in this space, how do they access the space, etc. It led us to sort of on our own discovery of how do we as RIAs access the space. So we had to do a lot of learning around that in terms of all the legal and compliance and all those things. We figured out how hard it was, and we decided that we could actually solve a problem for our LPs in terms of helping them access the space. So that was one of the, I think, core views that we hold is we're going to be hopefully trusted fiduciaries in terms of getting institutional capital into the cryptocurrency space and allocating to managers that we vet and trust and have a long-standing relationship with and growing with them. So that's one piece. And then the second piece, I think, given that it's a very young, nascent market, I think having a network approach to this in terms of investing in many funds and being collaborative really makes sense at this stage in the game. So that's how we're approaching things.
So at a certain point, I became really obsessed with the phenomenon that is cryptocurrency. And I started a hedge fund because I didn't think it was worthwhile for me to only trade the amount of money that I personally had. with the amount of obsession that is provided.
Yeah, I can second. Seth. We also have a more institutional background, so we are a commodity trading advisor operating with institutional investors. The big difference in our approach is that we are about democratizing the space, and this is exactly also what cryptocurrencies do. The goal of our company is to democratize quantitative finance by including the world and empowering the world basically to contribute to quantitative investing. We think of cryptocurrencies now, especially the futures that have come up for cryptocurrencies, as an exciting new opportunity and as an exciting new asset class. And we feel that we hope that we will see more futures that track cryptocurrencies in the future, because this will open up the space to institutional investors. And the entire ecosystem will benefit from that.
Yeah, I mean, I think there's maybe I heard before in the networking there's a lot of people that want to start doing hedge funds now. I mean, definitely it's something that kind of being on the news for a while. I'm interested. I know some of you are very quantitative heavy and like more like trading, like CoinAlpha, for example. But I mean, I think you're a more early venture as well as trading. But you have a hedge fund structure. Like, what do you think about this new hybrid model where you have liquid tokens, but then also some equity deals or like SAFT agreements? Like, why did you choose like hedge fund and not just like a VC that holds tokens, for example, and have like a 10-year lockup or something?
Well, because VCs have 10-year lockup, right? They have 5 or 10-year horizons, and it just doesn't make sense in this market.
Yeah, but then what happens if your investors are withdrawing all your money once the market is down? Because they have evergreen and they can withdraw every month.
That's the scary thing about the market being liquid, right? I mean, that's sort of a whole trade-off. Yeah.
One thing I would add is that in crypto assets, you see these venture capital economics, these disruptive technologies that grow 10x, 100x in a year, but with the liquidity of public markets. So for us, we actually don't invest in funds that lock us up for more than a year. And there are many of them out there, especially really early stage ICO funds, because our investors like that liquidity.
And I would say that I think this is a learning process for us and the whole market. But I mean, one thing I like to think about is if you were able to mark to market, Uber or whatever, the unicorn of the day, every hour, every day, you'd see a lot of volatility. And so this is kind of like a liquid venture model, and maybe the volatility is here to stay based on the innovation and sort of the rate of creation of companies. I think the valuations over time, the idea valuation, first of all, has to kind of creep into the market, and it'll sort of rationalize itself. But the idea of the volatility going away, I think, is probably misguided just based on the fact that you're seeing early stage things grow very quickly and little things make big differences for startups.
And one of the things I think is important is that in venture, the name of the game is board control, and that doesn't really exist in crypto. So I think that's a very different set of rules that you're playing with.
I'm actually going to take a bit of a controversial take on this. I know you asked me to. All right. I think that funds that take on more than one strategy is a sign that this market is immature. Because if you look at the normal hedge fund market, every fund has a distinct strategy and they invest into that. So if you look at, I believe that looking at ICOs, doing exchange arbitrage, doing price prediction, which is what we do, versus value are all distinct strategies that all require a lot of stimulation and focus. And when I see funds that are buying ICOs, but they're also doing quant, to me it's a sign that they actually have not focused and honed their strength in one strategy.
So I would agree with parts of that and disagree with other parts of it.
Because we're doing both.
Yeah. I mean, so I think it's a totally valid point that a lot of the markets are obviously extremely immature. I mean, we're living in a world where, like, if anybody in this room can stick their hand up and tell me exactly how to value a crypto asset, and this is what we do. We're on a panel talking about how we do this, right? So it's like this is the topsy-turvy kind of like moment of like unbelievable value creation that's happening. Like what these data structures suggest like frankly, is a completely new value paradigm. What does that mean? I mean, we're working, hard as hell to discover that and figure out exactly, how to kind of figure that. But my point is that, if you look at, just for example, just a couple of quick data points, BTC market dominance this time last year was what, 86%, something like that. We fast forward to this year, it's 34%, 33%, today. That certainly suggests that there is complexity that's emerging in the market, but I mean, I can tell you, and maybe some of the other quants can back this up, but you're not seeing like meaningful anti-correlation in the space, which suggests that you're not able to really diversify away whatever risk that people are saying you can diversify away in crypto assets. And why is that? Because nobody can tell you exactly how to value these things to begin with. So it's just like this crazy circular logic that we find ourselves in. And so anyway, my point is that I agree with you in that it's completely necessary to specialize. That's what has allowed humanity to achieve its specialization. But I think at this point in cryptocurrencies, the vehicle, you're still force-fitting the vehicle in even saying we're a crypto hedge fund. I mean, what these assets ask of the vehicle in terms of really getting the most value, that remains to be seen, I think. So I think in many ways I agree with you, but then in some ways I'm we're in a space where nobody wants to be wrong and nobody can possibly be right.
But most of the big hedge funds are not single strategy either, right? The prop division at Goldman is not single strategy, Rentech and single strategy, et cetera.
Right, but Rentech started as single strategy. Rentech started as all they
because
did
they were going into a mature
market.
market.
No, currency commodities were not mature in the 80s when they started. They only diversified into equities only in the 90s after 4 years of experimentation.
But I don't see a lot of funds that are clearly multi-strat.
So maybe I actually see quite a number. I see a lot of funds who start off as Quant or Exchange Arb, and then they're like, well, I'm getting allocations for ICOs. Maybe I should add an allocation.
Which one?
ICO. They'll call themselves absolute returns, and they'll throw in all these different strategies. And I agree wholeheartedly, Michael, that it's a sign that the market is immature. On the other hand, our top performing portfolio fund is from last year, is a smaller fund that does every strategy in the book. So,
I was going to say, we're a multi-strategy fund. We just do what is the thing that we smell in the market is the right answer at that moment.
It smells good. So you kind of talked about the big elephant in the room, valuations, right? So when you talk to traditional investors, they, what's the intrinsic value of this? How do you value this? What is the assets, liabilities here? How, what's a P&E? How do you? So, how do you guys evaluate those coins? The individuals that invest in projects, in ICO, pre-ICO. What's your metrics? I think that's what everybody's actually interested to see, to know more. So maybe you can shine some light on your way.
Aren't all the valuations of almost everything narrative driven? I mean, Netflix is a 240 to 1 PE ratio. Amazon's 200 to 1.
But there's serious users of revenue here. It's not complete bullshit.
Not complete bullshit, but there's
it's far from complete bullshit.
I'm not asserting it's complete bullshit at all. I'm asserting that there is a narrative, and the narrative has numbers that support the narrative, but there is a narrative. And I wouldn't say that. I would say that early on it was harder for Amazon to tell their story. And so I think that's a function of maturity, that you have more data to tell the story. And I think when you look at companies early on, they're mostly just based on what the narrative is.
I don't think Amazon had a 10,000% price appreciation in the first year.
That's fair.
I also think there's on top of that, I think that the traditional way of evaluating things have been tested for a few decades now. And that's how everybody has been doing it. Someone created that metrics, and now everybody following the same metrics, and that's became the standard. That's became how people evaluate things. This industry has been less than 10 years that people are looking how to evaluate. There's not really standard. There hasn't been not enough information and data points and cycles to really see what evaluation anything should be. So you see some coins are extremely overvalued in your opinion, But then the altcoins, if they actually last for the next 10 to 20 years, they might be valued way more than Google and Amazon today. Where there's some coins today that has no value today, and we all know that they don't have value today, but they still value very high for maybe just the narrative, because the narrative is really good, or they have a good story and a good marketing.
But that's why Amazon and Google and all those companies have higher valuations than IBM, because IBM doesn't have a growth narrative.
And IBM doesn't do a lot.
They don't have to listen.
You could
Specifically, well,
that's 3 times higher based on narrative than not 300.
Right, I agree.
I actually think valuation for funds isn't really the right question. The question is, where's your edge? Right? Because, so take Quantiacs Capital, for example. I'll call them out since they're probably one of the most well-known hedge funds out there. When Quantiacs invests in an ICO project, they bring in, Brian Andreessen, Union Square Ventures, a whole bunch of other followers. And that immediately creates a halo effect, which boosts that company's valuation. And so when Polychain later sells, they essentially pump the ICO price up, and they're getting out at a higher price. And so that's their edge. For us, we can't do that. No one's ever heard of CoinAlpha in that market. However, we have a team of data scientists and engineers, and we believe that the more data sources we have, the more accurate models we can get, the better we can get at predicting where price will go in the short term. And so that's where our edge is. So I think that when you look at a fund, you should really analyze where is their source of competitive advantage, and can they sustain that over time?
As a quant, I like to generally apply numbers on things, so I think valuations do matter. And I think none of this is investment advice, by the way.
Also done earlier.
As a disclaimer.
Can we all just piggyback?
For example, let's focus on the utility of the underlying asset. So let's take Bitcoin, for example, because it is the most mature. Let's assume that crypto will really develop into a similar role like gold, just as a store of value, so not as a currency. Then we can take the market capitalization of gold, which is in today's dollar terms maybe 7 trillion, and compare that to what Bitcoin is right now, which is, I think, 230 billion today, something like that, which might be roughly 3%, a little more than 3% of the market cap of gold. And that speaks, if you're a believer in Bitcoin, that speaks to its potential. And the same goes for other digital currencies. Everyone out there has a certain utility, if you will, either as cash or as a store of value or as a platform for decentralized applications. And you can map the value of these coins that they have today, perceived value, against other projects that have been there. PayPal is a payment company, Visa is a payment company. It is actually valuable, in my opinion. None of this is
transaction costs or still
it depends on the utility. In the case of Bitcoin, it's
I think we're mixing two things. So one is price, one is value.
Yeah.
Right. Price is okay for this $2 for $3. When you look at the value, you look at the fund, you mentioned IBM, you mentioned, Broadcom, whatever, they've got assets, they've got revenue. What's the fundamental behind Bitcoin?
What's the fundamental behind gold?
So gold, I cannot go and make any money.
There are huge numbers of
Yeah,
people
exactly.
gold as a
It's
store value.
scarce. Think of a metal that is exactly like gold.
There's like
Yeah. There's the right answer. I think there's many different theories about what the fundamental value of Bitcoin is, and it's still, my candid answer to that is that it's still being hashed out. Okay, that's the market speaks greater. We're in a frothy economy if you look at the larger basic picture of the NASDAQ essentially hitting the highs. So what is the fundamental value of Bitcoin? Right now, there are many different models. I've seen many different models that are all being worked out. Right now, it's supply and demand is what it is.
Let me just ask you one thing. What is value? What has value?
There's
So,
a fundamental.
Fundamental, like from the philosophical.
So I think it's
This real estate, this building has a value because.
Why?
So they cannot make.
Why?
interesting
Why?
argue.
Because people willing to buy it for a certain price, right? There's a social consensus they're willing to buy it.
Like history behind it. There are definitely people who buy real estate in large volume.
So-
There's a strong transaction history over.
So now there's a history of transaction on Bitcoin. They're willing to pay a certain price for it.
I think it's interesting to argue about the total total quantity of gold versus the total quantity of Bitcoin, because I think that the total supply of Bitcoins is actually known at a much higher degree than the total supply of gold. I don't think you can make Bitcoins in your
But I think this gentleman is conflating crypto with Bitcoin, which I think is the problem.
No, so like talking about Bitcoin, it's actually hard to imagine how we move beyond the 21 billion that are in existence or will be in existence when we're done mining. And I don't think that you can, I think it's easier to find new supplies of gold than it is to imagine how we move beyond 21 million Bitcoins.
I think
so. That's a different set of constraints.
Yeah.
You might say that that's valueless, but I think it's a different set of constraints. And I'm not here to tell you that Bitcoin is necessarily or is not valuable. I'm here to simply say that it is a different asset class and a different way of evaluating the value of something than the traditional assets. Because again, with gold, the total supply is not actually as constrained as we believe it is. You don't actually know how much gold there is in the world.
But I'm taking from this gentleman.
I think it's something else. I'm trying to categorize it in that way just to make the conversation better.
Yeah, I think this is a really good question. You know, the question of value in the world. I think we should just continue, and we'll be more than happy to.
But let's diversify. I mean, let's broaden the conversation. I think the gentleman's question is implying to me maybe a conflation of all of crypto with that of Bitcoin in particular. And what that brings to mind to me is the fact that we are in this sort of emerging evolutionary soup of cryptocurrency, and there's a lot of things that can fall by the wayside, just like in the history of the thing. But Bitcoin in particular has a narrative, has a store of value narrative. Other cryptocurrencies have their own very rational, strong technological underpinnings, and then there's a lot of opportunistic crypto crap out there. So we're in this period now of sorting all that out, and that's part of why you have managers to do this, et cetera, et cetera. But anyway, I think it's a mistake to just say all of crypto has no value, because that's true, but parts do and parts don't.
I want to point out something just real quickly before we get too far away from it, because I just want to mark this moment in time here. We are having this discussion in Palo Alto, California. So when this is going to come up, right? Like, how early are we? That's how early we are, right? So we're sitting here debating what this is, and this doesn't value, and I can't print Bitcoins and make gold in a hat or whatever it was. But I mean, the point is that if you really want to understand where this train is headed, go back to the 15th century when double entry accounting became a thing. There was a time prior to that where we transacted, and the idea of a debit and credit was not, you didn't do that. And so what does that mean? No, I have no clue, but I can tell you that that's ultimately what blockchains do really, really well, is they align incentive in a very, very specific way. And so as we talk about tokenizing projects, to your point, it's a completely different conversation than, blockchain, or Bitcoin, the Bitcoin ecosystem. But the structure, the data structure, which is the side of the business that I came up through, that's why it's interesting, because incentive, parties are encouraged to participate in a way that was not possible before. And I think that is one of the reasons why we've seen insane valuation here.
The part that I don't understand is I fully agree on the transactional technology, but putting a dollar value to that, it's two separate.
But this is Adam Smith's invisible hand, man. I mean, people literally, this is the most raw example of just value signaling that you're going to see. What is Bitcoin really? It's simply a ledger that shows you own something on that ledger. And by the way, what can we call this? Totally anti-fragile, completely persistent. I mean, there's a satellite that orbits Earth that runs the Bitcoin blockchain. So if Earth imploded and in 5,000 years a spaceship shows up and plugs back into that, your ownership is still on that ledger. So what does that mean? Well, what does that mean? I mean, sure. We're trying to figure out. Everybody's trying to figure out exactly what that means, but it's persistent ownership, potentially forever ownership, and in this anti-fragile system that aligns incentives like we've never seen. Look, markets are really intuitive. That's why we're seeing absurd evaluations, but it's a challenge to tease that nuance out of why exactly everybody feels that something special is happening here.
But like just to pick up on
one
that
last
point.
thing. We have another 15 minutes, and we should cover a few more points.
Okay, sure. I was gonna, the thing that they're saying though is that a lot of the crypto hedge funds are not focused on Bitcoin. That's how we outperform Bitcoin. We focus on the alternative, the disruption of cloud storage, the disruption of identity management, payment systems, and other things. So I think as a crypto hedge funds panel, what we do is we, number one, don't have to ride the volatility, don't, buy low, sell high, rinse and repeat. And number two, there's a focus on the emerging technologies. Again, that's venture capital economics with immediate liquidity. And that's, Bitcoin is, the headline is that Bitcoin used to be at 100% market dominance or 80% a year ago, and now it's at 30% of the 500 billion in market cap. So if you wanted to make the most gains in the last, several months, you would be in the best alternative.
Do you have any evidence on these other crypto tokens insofar as doing the thing, the network effect, and having their business operate under which you are making this prediction? You're making this bet on this future.
Yeah,
but you have other than Bitcoin and Ethereum hasn't even lived up to the DApp of the world computer, right? It's only done the ICO capability.
Yeah, so you know what? I want to answer that question, right? Because you know what value is? Value is when we tokenize our hedge fund, investors can invest in our hedge fund and take the money out the next day. And that's because we use smart contracts on Ethereum blockchain. We don't have an administrator. We don't have any human custodian. We don't need an auditor because everything's logged in the blockchain, right? That's value. That's a promise of using the blockchain to make things more efficient, transparent, and accessible.
How different is that from an exchange traded fund or a typical public equity?
So they have auditors on administrators.
Right. So the amount of capital you have to set up to exchange traded fund is a lot. Right. So if you open every other hedge fund out there, including the vast majority of crypto hedge funds, have a minimum investment of about $250,000. Right? That makes it way outside the province of most people in this room. Because we don't have these third parties, that's why we're able to offer a much lower investment that makes it possible for the ordinary investor to invest. But that's just one example. If you look at Ethereum blockchain, there's many examples of projects which are using the Ethereum protocols to make things more efficient through tokenization. And so I think that focusing on things like the DAO and saying there's no value outside of just price is vastly underestimating the value.
No, I'm just saying the business models haven't come out. In other words, you have, regardless of the Cardano, Tron, all of those things, they're very highly valued, they're highly liquid, but there's bag holders. You're getting in and out, but there's a bag holder sitting there with Cardano who doesn't even know if the token is going to deliver on the thing that it's supposed to be doing.
Isn't that kind of all early stage investing works?
Yeah, but we're not talking about early. You're economics of public companies in early stage business.
Until it comes out. Like,
software development positions for 7 to 10 years.
Exactly. But I guess what I'm saying is that
you're looking at underlying usage or utility or future projections of usage.
I guess what I'm saying is that if this is venture investing where you're liquid on day one, it still has the same, you don't know whether it's going to work for quite some time, but everybody can trade everything, so it causes a lot of
timeframes of discovery are typically years. Right. Just because of crypto, companies don't suddenly have innovation that is measured in days. They still have to build technologies, they still have to acquire users, they still have to prove that out.
My point is that it's very early.
Years.
Right, my point is that it's very early and people are looking, like Cardano is less than a year old, looking for Cardano to have a product that has billions of users that works the way that it's intended at this time is very premature.
With that being said, so custodian, what are you guys using for custody? I mean, now it's a big issue in the space. Many hedge funds have tons of tokens. Nobody is willing to custody it. I know Coinbase are coming up with something. BitGo, I think, is maybe custodying only Bitcoin, Ethereum, maybe Litecoin, some ERC20s. What are you guys using? What's out there? And kind of where do you see this is going in 2018?
Yeah, custody's hard.
Sorry to interrupt. So I think someone's interrupting the speakers, and I've had a few complaints, and I just wanted to ask that if everyone could just be a little bit more tolerant tonight. This is really not. Hi, Dave. This is really not the ideal situation, and I would have loved a larger venue. At San Francisco, we do have that. But everyone just has to be a little bit more patient. And these guys have volunteered their time. So please be a little kind and quiet. And there's people out there that can't hear even though we've got loudspeakers out there. So I just wanted to request your tolerance and so that everyone benefits from this. That's what I want. Thank you.
Thank you. I think the problem is that they don't hear you outside, so they want to make sure you don't speak.
Give Dave the mic next time.
So I think the question of custody is actually quite difficult because I think the question of custody is actually the mic doesn't work. I'm sorry. So I think the question of custody. Play with it all you want. I think the question of custody is actually quite difficult because you have a number of constraints as to the attack surface of storing these assets that I think most custodians just have no experience with. Like securing assets that are internet facing in any version of the world and figuring out how to protect those from the kinds of complicated attacks, I think is significantly harder than the way that we protect traditional assets. And so I think that there need to be new custodians that come into play, and those will likely get acquired by existing custodians. And I think that that's a long and complicated process. I think that it's possible at this point for most institutions to find a custodian for Bitcoin and Ethereum. I think as soon as you get outside of those two, it becomes a very complicated custody question. I think that there are solutions to this, but I don't think that most funds or most custodians are capable of offering those solutions.
So what do you do?
I'm not going to disclose all of my security practices here. I will say that there are a set of complicated procedures involving multi-party signatures that are not actually done through multi-party wallets because those are prone to error. And there are a set of dead man switches in the event that a set of people are incapacitated or unable to respond to pings to unlock assets for a period of time. And I think setting up that structure is decidedly non-trivial.
So, totally with Josh, this is a hard problem. No one's really figured it out yet. So we're Quant Fund. What we do is we only trade Bitcoin and Ethereum. And that's the reason we do that is because we need liquidity, we have to leave our coins on exchange, and we only trade on Gemini and soon GDEX. We'd love to trade on Binance, multiplier models, ICO coins, but because there is a substantial risk with leaving coins on exchange, we only work with gold standard right now because we don't want to risk our investors' money to that type of risk.
Can we ask a question? No, later. Nothing? Nothing on custody?
Yeah, I mean, I'm happy to answer this. So yes, exactly. I mean, there are technological ways of handling this, sure, and things that are available to folks that understand what a Merkle tree is and how to put multi-sig kind of strategies together. But I mean, fundamentally, when you look at it, it's like, what do we lean on a custodian to do? Like, we want to stay accountable. We want to stay as transparent as we possibly can. So, I mean, functionally, you're just using a mix of a couple of different service providers. You're going to use your fund admin. They're going to be in close contact with your legal counsel, probably. You're probably going to have an auditor thrown into the mix. That should get you where you need to be with your LPs. If you have members in your GP, they're obviously going to want to know what that workflow looks like. But then just in terms of like raw protection and protecting the assets, yeah, I mean, we can throw stuff in Faraday cages and talk about that as much as you want, I guess.
I was just going to say that our chief security officer won capture the flag at DEF CON, and we interviewed basically every qualified custodian that we could find, and none of them were doing what we thought was reasonable.
Yeah, I agree.
Or said another way, maybe they're not so qualified.
They're qualified for other assets.
Yeah,
like, it is pretty well understood how you secure equities at this point. Also, you can buy insurance on equities, and people will replace it if you get robbed. That is not yet true of the crypto market.
No, I agree. That's exactly. We self-custody as well, and we have a cryptographer who is one of the partners. So he's making all the security scheme and everything. And you usually don't see a cryptographer in a hedge fund, but I mean, I think in today's time it's kind of necessary.
Yeah, I frankly get spooked when I see hedge funds in this crypto space that don't have security people.
Yeah. So let's talk about banking. We saw the Metropolitan Bank seize withdraw deposit from international wires. I think as far as I'm aware, Silvergate is one of the only banks that actually let you open accounts with crypto. Do you think this is sustainable? Do you think maybe Silvergate might get shut down as well? What's your kind of take on it, and how you guys actually mitigate that risk in case something happens?
Just quickly, there's more than Silvergate. There's BMO, Silicon Valley Bank. So I think it's just a nascent burgeoning industry that will grow. We have a couple of bank accounts at 2 different banks. That's how we.
SVP decidedly is not crypto friendly.
That's not. We have accounts at BMO and Silvergate.
Yeah, right. But SVP is just very anti-crypto.
Not sure, they're backing out.
Okay.
Let us know when you shut down your account.
Yeah, I think at this point most banks don't want to be involved because of the potential risk that poses to them, their business models. But I think as regulations will catch up in the space, it will be a topic for banks that are more to support.
That was very simple.
Very simple answer to this. Most of our investors invest using Ether, so they avoid banks altogether, and that's why it settled in 15 seconds.
Yeah, I would just echo what the gentleman said about just the regulatory space just needs to catch up, and I think there's a lot of banks that talk to us every day about trying to share, get our input, et cetera. Everyone's just scared of getting fired, and so I guess, but that's going to change
in the middle.
It's changing. I mean, the U.S. regulatory environment in particular seems to be pretty friendly towards things, progress in a safe way. So
what is their biggest concern that they have?
It's AML KYC.
KYC is done. AML, I guess it's more.
Yeah, we use a couple of different banks, and I'm not going to name them, but we use a couple of different banks. Some of the names have been mentioned. They are few and far between. You're seeing folks kind of move into some pretty interesting solutions. We've heard of a couple of groups that are looking at like reverse mergers into shell corporations that have the correct sort of licensing to be able to become a bank. But the reality of it is, look, 500 billion. I mean, that's a big number, but I mean, really zoom out, right? Like there are massive, massive interests that banks represent, and they're just not going to jump into this. You don't see a ton of banks jumping into weed either, right? And so, I mean, until this is like kind of figured out, until somebody can tell you this is how to value this asset, maybe banks are gonna hold off a little bit. So, but yeah, I mean, it's a heck of an opportunity for somebody that can get it right and kind of stick to it. I mean, you've got customers waiting at the gate, right? All of us. So.
Anything else you guys want to discuss? You guys want to bring up before the Q&A? Good. Yeah.
You mentioned Polychain Capital. Olaf Carlson-Weed has often talked about Ether or Ethereum as being like a platform coin. I wanted to just quickly run through each of you and see, is there a Microsoft Windows that you see like Ether, where you have a lot of tokens that depend on it coming up? Just real quick.
Are you asking if there's somebody who's going to defeat Ethereum or Ethereum?
Well, for the ecosystem of smart contracts, let's focus on that.
I mean, Tezos launches next month in theory, so we'll see how that turns out.
Okay.
I mean, in theory.
So
I think that will be interesting when it comes out. I'm interested to see whether Cardano ships the protocol as they're describing it, because that could also be very interesting. I think that Ethereum has scaling issues, and I think those are really obvious. And I think that until those get solved, there's an opportunity. But I think that Vlad and Vitalik are thinking about how to solve these in a really intelligent way. Whether they'll be successful is always hard to tell. Anytime you do any software project, you don't know the outcome until it's done, until it's shipped. And so I tend to believe that this space will develop over time, because the early internet protocols were awful as well. But I think that there are a set of challenges that are inherently related to distributed systems that are really hard to solve. And so I am optimistic that people can approach these problems. I don't actually know whether anyone is going to be successful solving the scaling problem related to distributed systems and cryptocurrency.
So you're thinking Tango Networks or Toyota?
No, definitely not. Yeah, when somebody has a DAG network that works, I'll be really interested.
Without a security flag.
You can go to, you guys might know there's a research institute called Smith and Crown that has research that tells you all the different platforms, what they do. I know that, for example, Telegram's DoCoin is trying to also do a smart contracting technology. It doesn't come out for about a year, but then the private sale is happening. I'm very bullish on a different platform. Stellar, for example, is one that I really like because of the speed of transactions, but there's a lot of different choices out there. So.
Yeah, I can only second what you have said. Bitcoin is, I think, a first-generation coin. Ethereum is a second-generation coin, and now there are third-generation coins, and it's very hard to tell whether a third-generation coin is going to take over the market share from Ethereum or not. Time will tell.
So actually, I think Ethereum has a dominant position, and it will remain dominant. Because from a technical standpoint, it's very easy to port a smart contract from Ethereum, let's say EOS, Neo, or anything else. But what people are missing is that there's this whole developed ecosystem around Ethereum. It's the languages, the tooling, decentralized exchange protocols, a lot of things that make developing on Ethereum make sense because of network effects. And so EOS could launch tomorrow, or Tezos, but it would be difficult for them to capture the mind share that Ethereum has. The one contender I see is Neo. There's already been a couple of ICOs done using Neo, and especially in Asia, I can see them being more popular than Ethereum for sure.
I mean, just to add on top of that, you said like third generation of coins. Specifically with smart contracts, what we are actually interested in is private smart contracts, those that you can deploy and you can interact with, but you don't really know how the smart contract is written, because that allows you to actually have like an IP on the mainnet now that people can interact with without actually knowing what's inside and just copying it. That's something that we're investing in, and that's something that we see big companies that want to use the mainnet kind of realize after the proof of concept that, oh, it's like all my information is public, all my transactions are public, all the code I'm writing is all public. I mean, it's kind of like a communism, everybody can see everything. So it's like, people don't like that.
Yeah, just to answer your question head on, I'm not going to get so much out of this mic. Can everybody I guess okay. So yeah, just to answer the question head on, protocols. We are we're just at the absolute zero step of this thing. Like I mean, really, 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 we are. And so, as far as fingering a Microsoft or an Amazon or a whatever and saying and pointing that out of the ecosystem, I think it's way too early to even look at that. These protocols, they represent development environments. Somebody implied this a little bit earlier. Like that's what they are. And so as you see protocols do crazy raises, what's happening is they're becoming their own VCs. They're courting projects to come over and develop on their protocol. And they're building their own little ecosystem. I can't help but think, and I don't have the answer to this, but I can't help but think, and kind of as we observe the market, that protocols will be tailor-made based on their use case. There's not going to be one flavor that fits, everything. I like the description of Gen 1, Gen 2, Gen 3, but the other thing that I would suggest in that is when you see a fork in the Bitcoin blockchain, for example, if that doesn't scream evolution, I don't know what does. People are saying, we value this, but my tribe values it in a slightly different way than you do. I feel like we need bigger blocks or, higher throughput or whatever. And some people say it ain't broke. Why fix it? And so, ultimately that kind of evolution within these protocols, we can expect way more of that. And within that evolution, we will continue to see these things be tailor-built for, or I guess continue to be evolved towards kind of that end goal of whatever group of people are using them. So I don't think there's one size that fits all, and I think it's way too early to be able to poke into that.
Go ahead.
could talk about this, and this is really cool now. I feel like there's sort of been a conversation about three different things. The first is, apologies. The first is the blockchain technology itself, which may be revolutionary. The second, third were about the coins, or these units of value. One was about absolute value, the other was about relative value. Now, relative value, I'm not going to pretend to have any insight there. But more interesting than what makes the coins themselves valuable to me is what you're comparing it to. Good sovereign currencies are backed up by the issue. The US dollar is backed up by the full faith and credit of the United States. Now, what does that mean? And government, the state, has a monopoly on force. The US government does have the ability to tax all of us within its borders, and we pay the taxes or we go to jail. Now, weak countries, or we could vote with our feet. Weak polities tend to have weak currencies. Somalia has a weak currency. North Korea has a weak currency. Zimbabwe has a very weak currency. Strong polities tend to have strong currencies. The US, Great Britain, France, Israel, Japan, China, you can make some arguments. Now, my question is, when there is no monopoly on force, when there is no state-enforced scarcity by this one power that has the ability to compel all of us, where is the scarcity coming from? Is it from this one coin that's going to come along with the greatest technology that can blow all the others out of the water? Or will the next person always be able to create the next coin? And therefore, where's the value? Now, I come out of a commodity business, and compare this to gold. I was in the oil business. Drilling for oil is really, really expensive and really hard, and so is mining gold. So where is the absolute value as you see it, and what is to prevent the next interloper from coming along and attempting to move in and capture part of that market?
I think that...
I'd like to hear about technology too, because I think there could be great applications there as a banker.
I think that one of the potential end states for cryptocurrency is US credits, crypto yuan, crypto ruble. And I think then you sort of come full circle back to the monopoly on violence that is the state with the benefits of digital currency. And so I do think that that is a possible end state for cryptocurrency.
But the other side of what you said that I just want to peg that directly is you say that because the government can force you to do something or assert whatever violence or whatever to get you to do this thing, that they're forcing you into this value paradigm or whatever. But what these structures are saying is what if you don't have to force anybody to do anything because the incentive is already there to participate in a really specific way with this ecosystem, right? And so it's yes, I mean, this is what we're talking about when we say, well, I don't want to speak for everybody, but this is what I'm talking about when I say, the value paradigm is totally shifting here, because what you're implying with force is that somebody's saying, no, I don't want to do this thing, I'm going to make you, right, and force you into the whatever, believing in the risk-free rate, or however you want to put it. But with these structures, the reason people don't hack them, the reason people use computing power to, instead of hack, to mine, is because it makes more sense. That's how you can actually make money. Otherwise, you're going to spend $400 million or $500 million, whatever that number is today, probably much more than that. I think that was 2016, to overpower the Bitcoin blockchain and hack one 10-minute block, and then still you don't even know what's inside that block. So my point is that it's instead of this, the way that we think about it now is force and violence and whatever, getting people to do things in a specific way, or whatever, forcing, I forget, I don't want to put words in your mouth, but forcing in that direction. And so what I'm saying is if you never have to force people to behave in a specific way, if the structure just encourages that behavior automatically, that's really interesting. And I think that's part of it.
We have to wrap it up, but we're here to educate, come ask questions, we here.
Thank you, everyone. We actually have to wind up the panel, and I wanted to thank everyone on the panel. And please.